to a long-term investor, because that is where you can see the power of compounding and the power of wealth creation. One more thing I'd like to tell is that always divide your portfolio into two categories. What is a portfolio? A portfolio is somewhere you have your stocks, right? That is where you hold. Say, suppose you're holding shares of Reliance. So you have the shares of Reliance in your portfolio. So you need to divide your portfolio into two, being active and passive. So what is an active portfolio? An active portfolio being the portfolio in which you buy and sell stocks on a regular basis. Regular basis, as in it depends on your risk appetite as well. Active portfolio means that you buy and sell stocks for the short term momentum that you can time in the markets, and a passive portfolio is somewhere which has something to do with long term. You hold on stocks for a long term in order to get expect the power of compounding. Okay, so if you know, there's one beautiful quote in the field of stock market which tells that one must forego short-term profits in order to make long-term wealth. Now, basically, what does this mean? It means that, say, suppose you're holding stocks of Reliance and you get a profit of 2,000 rupees in 2 days. Well, you know, any average investor, when he looks at a 2,000 rupee or 3,000 rupee profit in 2 days, he's going to book profits. But they do not look at the bigger picture, the bigger picture of holding on to stocks for a longer term. So, if you hold on to stocks for a longer term, you can expect the power of compounding and wealth in your portfolio. And one more thing I would like to tell is that anytime you buy any stock, please stick on to quality stocks. Do not go for any and every stock. There are about 5,000 companies that are listed in the NSE. So out of these 5,000 companies, only 10% of them are very strong. So I would only go on for the quality stocks and take risks later once you really understand what the market is all about. Okay, next slide, please. Yeah, fundamental analysis by Parisi.
Thank you, Shivam. So basically, a fundamental analysis. Next slide, Frista. So basically, a fundamental analysis is done to determine the fair value of a financial instrument of a particular company. It focuses on factors that affect the actual business and future prospects, and it deals with analyzing the well-being of a company. So basically, for an example, when you buy a phone or a laptop, you always look at the quality and features of the laptop or the phone. You check out all the available brands, compare their features, quality, price. And well, this is how a fundamental analysis works in the stock market. It's just that you look for the stock and you analyze the qualitative and quantitative aspects of that particular stock. So, next slide, Frista. So, in a qualitative side, you basically look for the business model, the competitive advantage, management of the company, ownership, and the corporate governance. So, basically, all these are related to the company. So, what a business model is, like how the company or that particular firm is generating their profits and their cash flow, and the competitive advantage is like how long or how successful the particular company is in the long run in the market. And the management and the ownership is nothing but, like, actually, if you see, the management of a company directly impacts the price of a share. Like if you see Yes Bank, like previously had a lot of management issues and the price went down from around 800 to now it's just 13 rupees or something like that. Like you can look how the management plays an important role in deciding the share price. And next, if you look, it's the quantitative analysis, which is nothing but the financial statement, financial ratios, and market share. So basically, these three things I want to learn more about it in 11th and 12th. Next slide, Frista. Actually, can you go to the next slide? The next slide again. Yeah. So basically, moving to before talking about the financial and the financial statements and the ratio, I'll talk about the top down and bottom up approach. So basically, there are two ways in which you can analyze the company's future prospects. So top down approach is nothing but moving from a general agenda to a specific thing. So basically, a top down approach starts from analyzing the economy. So when you analyze the economy, you look for the GDP, inflation, interest rate, budget, and tax structure of the economy. And based upon that, you analyze the industrial sector. So basically, industrial sector is nothing but, suppose if you take a company, like just take Yes Bank as an example. It is a banking sector. So you look for the banking sector, you analyze the banking sector, and according to that you will look for the competition, the past performance of all the other banks, the future prospects, the cost structure, and all of this in the sector analysis. And the last is the company analysis. In this company analysis you look only about the company, so which will include looking at financial statements, the financial ratios, and the market share. And if you look at the bottom up approach, it's just the opposite of top down approach. You look at the company, then you analyze the industry, and then you analyze the whole economy. So this is how the two ways in which you do the qualitative analysis of a company. Frista, can you go back to financial statements? Yeah. So financial statements is basically nothing but the report card of a company. It includes balance sheet, income statement, and cash flow statement. All these three things you will learn more about it in 12th standard. So I'll just give you a rough idea of what these three things are. So balance sheet is nothing but a summary of assets and liabilities. And I'm pretty sure by now you must be aware of what asset and liabilities are. And income statement is nothing but it gives you what is the income, like the profit, the sales of the company. And the cash flow statement is nothing but it shows you the inflow and outflow of the cash in a particular company. Can you go to the next slide, Shrista? So right now there are five important financial ratios to look for. Like there are many ratios which you might learn later, but right now you can just look for these particular five ratios because these five are only important right now, and these are one of the easiest ratios which you can understand. So basically, current ratio is nothing but the current assets upon liabilities, and the ideal ratio is 1, because if you have more liabilities it is not worth investing. And the debt to equity ratio is nothing but debt of a company compared to the ownership or the equity. So and below 1 is healthy, because if you have more debt, the company is going to use the funds to pay their debt, and which is not a very good company at all. Now return on capital employed is nothing but how much return is given is gained by a company on its capital, and a healthy ratio is above 12%. A PE ratio is the current share price of a company in relation to earning per share, and earning per share is nothing but the profits allocated to a share. And the ideal PE ratio is 13 to 15. Even if it's higher, it is a good indicator. Return, I think I've repeated return on capital employed. The last one is nothing but return on equity. Return on equity is nothing but the equity, like the share price, the amount you get on share price. So that is what return on equity means. Next slide, Frista. Yeah. Okay. So basically, to do this fundamental analysis, you can look at newspapers, investment journals, industrial reports, and obviously the annual reports of a company. So all this you can get at a website called as screener.com. So this is a perfect website where you can look for all this information, and it's very easy to compare the competitors as well. Next slide, Krishna. Yeah, Shivam will take over from you.
Yeah, thank you, Paridi. Okay, moving on to technical analysis. So basically, before buying a stock, any educated investor has to analyze a company or the stock or a sector he's trying to invest in. So as Paridi already mentioned, fundamental analysis is one way of, studying about the growth prospects of the company, of the sector, studying about the balance sheet, studying about the various ratios that are involved. Technical analysis is something quite different from what you would basically do. Next slide, Shrista. Yeah. So making money with charts. So what does that basically mean? What does making money with charts mean? Basically, technical analysis is all about interpreting charts and arriving towards insights on the probable future trend of prices. Technical analysis is also about identifying patterns that have been producing consistent results over a period of time. Technical analysis is the analysis of historic price movement of the stock to different market cycles through different ups and downs. With the previous prices of the market, you predict the future price movements. See, now I get it. Technical analysis is something that is very difficult to understand through a webinar. So my main aim over here is to preach that there is something called as technical analysis also, because people feel that while analyzing stocks is only about balance sheets. Well, that is one aspect. You have two aspects. The second one being a technical analysis. Next slide, Frista. Yeah. So can you go to the can you go two slides in front? The next one. The next one. Yeah. So before telling you about the various basic terminologies that are there in technical analysis, what basically you are what are you studying with? What is that you're taking care of? Well, you are studying about technical analysis. That is the price movement, the way the price of a stock has been moving in the previous in the past, so that you can know how it will run in the future, right? So this is how a normal this is what you are dealing with in technical analysis, that is with charts. You look at the price movement. So if you're a person who likes numbers a lot, I feel technical analysis is the right one for you. Okay, so can you go to the first slide, the basic terminology slide, Tristan? Yeah, no, the before one. Yeah, the next one, Tristan. The next one. Yeah, no, different types of charts. Yes. Okay. So going on with the different types of charts, there are three types of charts which are quite famous. First one being a line chart. What does a line chart signify? Basically, say suppose the trading session starts at 9:15 in the morning and ends at 3:30 in the afternoon. So the last price at which a company has ended, say suppose Reliance closed at 2,100 at 3:30, that is going to be its closing price. All right. So using these closing prices, you create a line chart. That is how a line chart basically is created. Second one, going on to the bar chart. Well, a bar chart basically is, we have drawn a lot of bar diagrams in our in school, right? So usually bar chart in a bar chart, as Sai Pranav rightly mentioned, what is bullish? Bullish is when you're expecting the markets to go up. What is bearish? Bearish is when you're expecting the markets to come down. So when you look at a green candle is going to be a bullish, and a red one is a bearish one. So usually in a bullish bar candle, the open is in the bottom and the close is on the top. Whereas on a bearish one, the company starts trading at a higher level and it closes at a lower level. That is why it is called as a bearish chart. Next one, please. Next. Yeah. Candlesticks. So candlesticks are the most is one of the most famous technical analysis tool that anyone uses. Being that candlesticks is more easy to understand, it is more appealing to the eye when compared to a line chart and when compared to a bar chart, and it also provides a lot of information rather than what a line chart can provide. Okay, so the candlesticks, this the same theory stays over here also. Candlesticks, if it is a bullish one, starts below and ends at above, and if it's a bearish candlestick, it starts above and ends below. So I hope you guys have understood what different types of candlesticks are. All right, so next slide. Yeah. So let's go on to the basic terminologies that are that are connected to technical analysis. See, if there is anyone in the webinar who's very interested into the stock markets and who wants to take technical analysis as a career, I think you can take a paper and pen and you can sit, because this is going to be something very interesting. Let's go first to support and resistance. What is support and resistance? This perhaps is the most simplest terms in technical analysis. So support basically means this represents the demand zone. So I'll just tell you the theory over here. I'll tell you how it is practically used also. So first being a support. So this represents demand zones. So this is a level where we find a level of demand for a stock that stops the price from falling further. So from this, you have understood that support is something that happens on lower levels of the stock price. Okay. Resistance. Resistance represents supply zones. Here we find a level of supply that stops the price from increasing further. So resistance is something like, say, suppose you are a 100-meter sprinter, all right, and you finish a sprint in 13 seconds. Your target is of finishing it in 12 seconds. So this is the resistance. That 1 second is the resistance that you're not able to beat, right? So that is called as resistance. Next slide. Yeah, so this is a practical example of how technical analysis and support and resistance works. All right. So first being that I'll just tell you what, as I already mentioned, resistance is a level which a stock is not able to move further. So support is a level from which the stock is not able to go down. Right. So support is the level where people usually buy a stock, and resistance is the place where the person usually sells a stock. All right. So I feel support and resistance is something that people need to understand in order to excel in the field of technical analysis. Okay, let's go to the next slide, please. Yeah. So going on to the Dow theory, basically, what is the Dow theory? The Dow theory is a financial theory that says that market is in an upward trend if one of its averages advances above a previous important high and is accompanied or followed by similar advance in the other average. So, in plain vanilla sentences, the Dow theory suggests that it suggests the study of trends. Okay. So you study trends. We all know what is an upward trend, sideways trend, or a downtrend. Well, this is the beauty of technical analysis. With technical analysis, the words are so simple to understand that that even a layman can understand what a sideways or an upward trend is. Right? Uptrend is something which says going up. Downward is something which is coming down, and a sideways is being on a congestive zone. Next slide. Yeah. So Dow theory mainly consists about trend lines. So basically, what are trend lines? So trend lines are an important tool in technical analysis for trend identification and confirmation. So it means that once you identify the trend in which a company is performing, that can give you a buy call or a sell call. What is a buy call? A buy call means the indicator that shows you to buy a stock. A sell call is something that shows an indication of selling a stock, right? So going on first to uptrend. What is an uptrend? An uptrend is characterized by higher highs and higher lows. In simple words, the prices are on a rise. Sequential increase in minimum prices. So, well, all of these theory is very difficult to understand. So I'll just give you the practical example that is there in front of the slide. It's the Nifty 50 index that I have taken the chart from 2007 levels to 2021. That's about 13 to 15 years of odd data. So starting on, say, suppose, as you can see, the stock the index has been going up. So what does this signify? This signifies that the price has also been going up, right? So higher highs and higher lows are something that indicates an uptrend. So whenever you see higher highs, if you look at 2007, if you look at the 2007 higher high, and when you look at the 2021 higher high, you can look at the difference the market has played, right? You can look from which levels the market is at 15,000, 16,000 odd levels now. So my one tip would be that if at all you are trying to invest in a company, only invest in a company that is in an uptrend. Do not buy a stock which is when it is falling down. Right. Going on to the next slide. Yeah. So sideways trend. Sideways trend, the name all again suggests that sideways meaning it is in a congestive position, right? This represents stability between supply and demand in the marketplace. So as I told in the first slide about what support and what resistance is a point after which the stock is not going up. Support is a point after which the stock is not going down, right? So this is a stock of Biocon. So over here, if you look, the support levels are at 370 and resistance levels are at 420, right? So that is a 50 rupee gap between the support and the resistance. So if at all you buy a stock at this place, you're going to get either stuck at the resistance levels or you're going to get stuck at the support levels, right? If it makes sense. So that's what I'm telling. So whenever you buy a stock, can you go to the previous slide? Yeah. Whenever you buy a stock, just ensure that you are on the uptrend side. Never buy a stock because you never know. This stock might go down or it might go up. So your risk to reward ratio is too high over here. So always buy a stock when it is in its upside trend. Let's go to the next slide. Yeah, a downtrend. Basically, a downtrend is completely opposite of that of an uptrend, a line that characterized by sequential decreases in maximum prices. A series of lower highs and lower lows constitutes a downtrend. So, in a downtrend, if at all you're holding a stock, I would tell that if you're holding a stock already, you need to sell the stock because the company is going on a downward basis. And the quote which says that never catch a falling knife. So never catch a falling knife. So no matter at which level you catch the falling knife, it's going to poke your hand. So never buy a stock when it at its downtrend. Yeah. Next slide, please. Okay, so let me first quickly summarize. What did I tell about uptrends? Uptrends is something when the market is going up, the prices go up. Side trend is when the prices is not able to, when the prices are not moving either up or down. And coming down to downtrend, downtrend is when the stock prices is falling down. So that is the brief summary in the most simplest terms about the Dow theory. Okay, now going on to the various chat. I know this is a little bit of a heavy portions for a person who's doing technical analysis for the first time, but it's just a way of me to tell how technical analysis is. All right. So, what are the various chart patterns? First one being a head and shoulder pattern. See, as I previously mentioned, that in technical analysis, it is very easy to understand the terms. So, if you look at a normal human body, the shoulder is at a level lower than the head. So, both the shoulders are at the same level, and the head is above, right? So, whenever you see a head and shoulder pattern in a stock, it is a symbol. It is a sign of selling because after the head and shoulder pattern is complete, you can see how the stock has gone down, right? So usually you see a head and shoulder pattern after an uptrend. Next slide, please. Yeah. So what is an inverted head and shoulder? An inverted head and shoulder is something that is completely opposite of a head and shoulder pattern. An inverted head and shoulder pattern is seen as depicted in the graph. It's seen after a downtrend, right? So after a downtrend is when you see a inverted head and shoulder. A inverted head and shoulder shows you that it is a sign of bullishness. A company has consolidated and it is now ready to rise. That is what an inverted head and shoulder tells. So a head and shoulder and an inverted head and shoulder are completely opposite of each other. That is an easy way to remember what both are. Next slide. Yeah, so a double top pattern. Again, the word suggests a double top pattern, a pattern that is made at the same level twice, right? So that is why it's called as double top. Yeah, so a double top pattern usually is made after an uptrend, which signifies a bearish signal after which the price might start coming down. So as you can see in the charts, at 380 levels, Suntech Realty has made a double top pattern after which it reached levels of 260 and 250, which is about a 25 to 30% decline in the price of the share. So it is a bearish signal, a double top pattern. Yeah. Next slide, please. A double bottom pattern. So basically, a double bottom pattern is completely opposite of that of a double top pattern. The reason being, I have selected these patterns for today's webinar is that they are really easy to understand, and it's something that a person can remember, right? So a double bottom pattern is something that happens after a downtrend, which shows a sign of bullishness after the double bottom pattern is over. So usually whenever you see these patterns, you can either take the buy or the sell call depending on the pattern. Next slide, please. Yeah, this is the last pattern. The last one being the diamond pattern. Well, as we all know, diamonds are pretty rare. Diamonds are pretty valuable. The same way, the diamond pattern is also pretty valuable and pretty rare in a chart. All right. So this is a chart. This is a chart of Motilal Oswal that I have shown over here, which has made a diamond pattern. So as you can see, it is not a complete diamond pattern, but this is what you can expect. So this is a diamond pattern, after which a diamond pattern is basically a bullish signal. After the diamond pattern, as you can see, the stock has run up quite a bit. So that is what a diamond pattern can do. A diamond pattern is a sign of bullishness. If you look at the diamond pattern, it was created at 600 odd levels, after which you can see the company has reached about 1200, which is a 50% increase in the price of the stock, which usually companies expect, a 50% rise in the stock, say maybe in 2 years or 3 years, it is accumulated. Whereas if you look at this diamond pattern, you have made that in 2 months. So that is the beauty of technical analysis. Next slide. No, the next slide. Yeah, so this was a small gist that I shared about technical analysis, which I felt which is pretty interesting, which might grab the eyes of everyone in the webinar. Now going on to sector analysis by Saipan.
Next slide, please. Next slide. The Indian banking system consists of 12 public sector banks, 22 private sector banks, and 44 foreign banks. As of February 2021, the total number of ATMs have also increased to 209,840. According to Reserve Bank of India, India's foreign exchange reserves reached $582 billion as of April 16, 2021. Bank credit and deposits stood at $108 trillion and $151 trillion, respectively, as of April 23, 2021. Indian banks are increasingly focused on adopting integrated approach to risk management. The non-performing assets of commercial banks has recorded a recovery of 400,000 crores in financial year 2019, which is the highest in the last 4 years. The RBI has decided to set up a public credit registry, an extensive database of credit information accessible to all stakeholders. The Insolvency and Bankruptcy Code Ordinance 2017 bill has been passed and is expected to strengthen the banking sector. Rising income is expected to enhance the need for banking services in rural areas and therefore drive the growth in the sector. The pandemic has also revolutionized the digital payments, which will trigger massive changes in the way credit is dispersed in India. Debit cards have radically replaced credit cards as a preferred payment mode in India after the demonetization. In April 2021, Unified Payment Interface recorded 2.73 billion transactions worth 4.93 lakh crore, or $67 billion. Next slide, please. So, the advantages of India in the sector of banking: the robust demand. Increase in working population, growth disposable income will raise the demand for banking and related services. RBI Payments System Vision 2021 expects the number of digital transactions to increase by 4 times to 8,707 crore in December 2021. Innovation in services, mobile, internet banking, and extension of facilities at ATMs will improve operational efficiency, and vast unbiased population highlights scope for innovation and delivery. Business fundamentals. Rising the incomes are improving the revenue mix of banks. High net interest margins along with low and non-performing asset levels will ensure healthy business fundamentals. Policy support by the government. Wide policy support in form of private sector participation, liquidity infusion. RBI allowed retail investors to access to the government securities or G security market. Next slide. Next slide, please. Pharmaceutical sector. Indian pharmaceutical sector supplies over 50% of the global demand for various vaccines, 40% of the generic demand for US, and 25% of all medicines in UK. In India contributes the second largest share of pharmaceutical and biotech workforce in the world. According to the Indian Economic Survey 2021, the domestic market is expected to grow 3 times in the next decade. India's domestic pharmaceutical market is estimated at $42 billion in 2021 and likely to reach $65 billion by 2024 and further expand to $120 to $130 billion by 2030. Indian drugs are exported to more than 200 countries. Indian drugs are exported to more than 200 countries in the world, with US being the key market. Generic drugs account for 20% of the global export in terms of volume, making the country the largest provider of generic medicines globally. It is expected to expand even further in the coming years. The Indian pharmaceutical sector exports, including bulk drugs, intermediaries, drug formulations, biologicals, Ayush and herbal products, and surgical, reached $24 billion in the financial year 21. India's medical device market stood at $10 billion in the financial year 20. The market is expected to increase at a compound annual growth rate of 37% from 2020 to 2025 to reach the target of $50 billion US dollars. Indian drugs and pharmaceutical sector has received cumulative foreign investments inflows worth $17 billion from April 2000 to December 2020. To achieve self-reliance and minimize import dependency in the country's essential bulk sectors or bulk drugs, the Department of Pharmaceuticals initiated a PLI scheme to promote domestic manufacturing by setting up greenfield plants with minimum domestic valuation in 4 separate target segments with a cumulative outlay of 6,940 crores from financial year 21 to financial year 30. India plans to set up nearly 1 lakh crore fund to provide boost to companies to manufacture pharmaceutical ingredients domestically by 2023. Next slide. So the advantages for India in the sector of pharmaceutical: cost efficiency, low cost of production, and research and development boost efficiency of Indian pharma companies, leading to competitive exports. Indian pharma exports reached 24 billion in the financial year 2021. Economic growth. High economic growth along with increasing penetration of health insurance to push expenditure on healthcare and medicine in India. Policy support. In June 2021, Finance Minister Ms. Nirmala Sitharaman announced an additional outlay of $26,578 million that will be utilized over 5 years for the pharmaceutical PLI scheme in 13 key sectors, such as active pharmaceutical ingredients, drug intermediaries, and key starting materials. Increasing investments. As said before, the foreign direct investments inflows in the Indian drugs and pharmaceutical sector stood at $17 billion from April 2000 and December 2020. Next sector. Next slide, please. Next slide. Auto components. Auto components industry has experienced healthy growth over the last few years. Over the period between financial year 16 to financial 20, automotive components industry registered a compound annual growth rate of 6%, reaching US $49.3 billion in financial year 20, with exports growing at a CAGR of 7.6% during financial year 16 and 20 to reach $14.5 billion in 20. The auto component industry accounted for 2.3% of India's GDP and 25% of its manufacturing GDP, providing employment to 50 lakh people in 2018 and 19. It is also expected to grow to $200 billion by the end of financial year 26. Due to high development prospects in all segments of the vehicle industry, the component sector is expected to rise by double digits in the financial year 22. A cumulative investment of $12 trillion and 12 trillion Indian rupees in vehicle production and charging infrastructure will be required until 2030 to meet India's electric vehicle ambitions. And this is likely to boost the demand of auto components and manufacturers. Local auto components and local manufacturers. In March 2021, the government announced to offer fresh incentives to companies making electric vehicles as part of a broad auto sector scheme. The scheme is expected to attract $14 billion in investment in the next 5 years. You can also see the recent news of Ola, which is in favor of this industry. Next slide, please. So what is the advantage? These are the advantages for India in the sector of auto components. Demand. Growing working population, expanding middle class are expected to remain key demand drivers. By 2025, 4 million of electric vehicles could be sold each year and 10 million by the end of 2030. Export opportunities. India is emerging as a global hub for auto component sourcing, and the industry exports over 25% of its production annually. Auto components exports are generally are expected to grow at 23% annually to reach $80 billion by 2026. Policy support. 100% FDIs under the automatic route for the auto component sector. In June 2021, the government was planning to notify the PLI scheme for auto components. A dedicated policy, FAME, faster adoption and manufacturing of electric vehicles, was launched to incentivize electric vehicle consumption and support manufacturing. A cost-effective manufacturing base keeps competitive advantages that a cost-effective manufacturing base keeps costs lower by 10 to 25% related to operations in Europe and Latin America. India is the second largest steel producer globally, hence has also a cost advantage. Rising petrol prices will also be in favor of electric vehicles demand. Next slide, please. Now Shivam will take over. Thank you.
Yeah, thank you, Sai. Okay, moving on to metals. Okay, so metals as a sector is something which is very difficult to understand. So, but it is a very interesting topic as well. So, going on to the metals industry is dedicated to extraction of metals and mineral reserves. Metals and mineral reserves, two major segments being ferrous and non-ferrous metals. All right. So now, in metals, you have the sector of steel also. Okay, so the steel industry of India has witnessed a 12% decline in the global, a 12% decline in steel output from December to January due to reduced utilization. Now, why did this reduced utilization happen? This reduced utilization happened because of the oncoming of the COVID-19 pandemic, how it has struck India. All right. So, with easing of lockdown and pent-up demand from the auto sector, we can expect capacity utilization to increase to 95% from 35% levels. So, what does this mean? So, this means that during the time of lockdown, the companies that were using steel used to only use 35% of their normal usage, which we can expect it to increase to 95% by the end of 2021. So higher automotive sales, that is higher sales of cars and vehicles, higher rural consumption and government spending on infrastructure is something which is of major importance. So now, something as we all know that the COVID-19 pandemic, it had the outburst from China, right? But it is also a conspiracy theory to understand that China, being the country who started the COVID virus, is actually the one that is recovering the fastest. Because if you look at the exports from India to China for metals, it has increased by 44%. That is 44% after a big lockdown and a big COVID variant like this. I feel it's something that is a little bit, doubtful. So and then going on to finished steel consumption has been the highest in November, December, and January. So after a decade, India has seen a more consumption over production of metals. So this is a major positive for the metal sector, being that the consumption is more than production. So revival of overall economic activities which are leading to improvement in domestic demand for steel is also major positive. Okay, so this is about a little bit about the past of the metal sector. Now going on to the future outlook of the steel sector, how is it going to perform? First one being that government plans to focus on infrastructure and investment in places such as railway, affordable housing, oil and gas, which can aid to this sector. Okay, so another advantage for the domestic manufacturers of steel is that higher international steel prices is making every country come towards India for demand. So as it can be seen, China, the imports China has taken for about 44%. That's a 44% increase, which is also a major positive for the metal sector. One more thing that I have got to know in this experience of my stock market in the past 24 months is that the steel and metal sector is a cyclical sector. All right. So it being a cyclical sector, it performs and goes into hibernation. So what does it mean? Well, it means that steel is a sector which doesn't perform for a long period of time and it then performs only for a year or two. So in this year or two, when it performs, all the companies, all the shareholders, all the stakeholders, everybody's earn. But the next 8 to 10 years, they cannot expect the profits and the growth that they can expect in other sectors. That is one thing that is a concern in the metal sector, because an average investor who's not too much into fundamental analysis cannot time the markets for the metal sector as such. Next slide, please. Yeah. So going on to real estate. Well, everybody knows what real estate is, right? Real estate means, buying and selling of houses, buying and selling of commercial properties, and commercial and retail and housing, right? That is what constitutes in real estate. Next slide. Yeah, so real estate is a sector that I have been tracking for quite some time now. It's been about 24 to 30 months that I have been tracking the real estate sector. Real estate sector is one of the most globally recognized sectors, and it comprises, as I told already, it comprises of four subsectors. That is the housing, retail, hospitality, and commercial. Okay, so we had three major happenings in India from 2016 related to real estate. First one is demonetization, which we all know. Second is the RERA Act. Basically, what is the RERA Act? RERA Act is the Real Estate Regulatory Act. All right. So the Real Estate Regulatory Act has made the laws more stringent for the developers, which is a big advantage for the customers, but for the developers, it is a very big disadvantage, and GST also. So after all these three major happenings, real estate has become a very narrowed down sector where only the quality companies have sustained. So the Indian economy also started to show signs of crumbling after the COVID-19 pandemic, which was led by the second wave also. So this put a lot of dents in the real estate sector and the economy as a whole. So real estate has been through a lot of tough times in the past 10 years. So I feel that the outlook for the realty sector with this new unlocked trade is going to be very, very good. So the first one being a robust demand for affordable housing. So with COVID, well, everybody has their own homes, right? So with COVID-19 pandemic, people have understood that owning a house which is their own is of utmost importance, because it is like a shelter and a security for them, right? Because God forbid, if there is another COVID pandemic or such a pandemic that hits us, I feel that people having houses are more safer. Okay, so second one is that demand for large secure homes. As we all know that, most of the higher income bracket people have made a lot of money in this COVID-19 pandemic than what they have made pre-COVID levels, right? So I feel because they have made a lot of money, they would shift somewhere for investments. So where would they shift for investments? I feel real estate is something that people make a lot of investments in. So I feel that demand for large secure homes in metropolitan cities such as Mumbai. Mumbai had a stamp duty. They reduced stamp duty by 50%, which also increased. What is stamp duty? Stamp duty is a charge that you put when you buy a land. All right. So stamp duty also reduced by 50% in Mumbai, where real estate is the most expensive in the world. And the third one being in cities such as Chennai, Bangalore, everywhere I expect a demand for large secure homes. Third one being a tier 2 and tier 3 city demand. With the oncoming of the COVID-19 pandemic, the government has understood that they need to take care of the tier 2 and tier 3 cities as well. So they have started with the infrastructure. So they have started increasing the infrastructure in tier 2 and tier 3 cities, which can also bring a demand for affordable housing in these cities. The last one, but not the least, ready to purchase housing. What is ready to purchase housing? Basically, with COVID-19, people have started to social distance, right? So people are not ready to buy a house which is not fully constructed. So ready to purchase housing also can see a robust demand and growth in the coming following years. Yeah, so as low interest rate and stamp duty reductions are being viewed as the biggest reason for the revival of the real estate sector, we all know that the RBI has an accommodative stance on the interest rate. So what is accommodative stance? Accommodative stance means the RBI has not changed their view on the interest rate percentage. So the interest rate percentage is at low levels of 4%, which is a very, very big positive for anybody who wants to get a loan. All right. So I feel that if at all the interest rates are going to increase, it might also have an adverse effect in the home loan. So home loan interest rates. So until and unless the interest rates don't rise, I feel the real estate has a positive outlook. Yeah, going on to the next slide, please. Next slide. Okay, no problem. I'll start with the capital goods sector. Okay, so the capital goods sector. So basically, the capital goods sector are physical assets that a company uses in the production process to manufacture products and services that consumers will later use. What does capital goods have? Capital goods has machinery, has equipment, has tools, has everything to do with big machines, right? So, if you look at the outlook of capital goods, as per my analysis, the sector remains very healthy given the government's thrust on infrastructure development. The union budget has also given a 34.5% increase in capital expenditure for infrastructure. Okay, so the government has also allocated 1 lakh crore rupees for development of railway infrastructure. However, as we know, capital goods is an intensive sector where not only investments by the government is important, but also investments by private sector is very important, right? So this will have to be both in infrastructure and manufacturing. So I feel we have a large positive when it comes to the capital goods sector. So yeah, that's about the capital goods sector. Next slide. Next slide, please. Yeah. So coming back to liquidity and demat accounts, I know this. Okay. So what does liquidity and demat accounts mean? Basically, liquidity is when there is over free flow of cash in the market. So that is what liquidity means. And demat accounts, as we all know, demat accounts is dematerialized form in which our stocks are being held. So say suppose you have stocks of Reliance, you have Reliance shares in your demat account, right? You need to have a demat account in order to trade in stocks. Okay, so the total individual investors in the stock market has increased by a whopping 142 lakh in FY21. So what I feel is that before going to the aspect of increased surge in demat accounts, let us understand one thing, that stock markets is something that is forward looking. You look forward into the future, right? That is what is about stock market. But when you look at economics, economics is something that is backward looking, right? So stock market and economics cannot go hand in hand. That is because because I have a CA who I know, who, at the starting of the 2020 March pandemic told me that the balance sheets of the companies look very weak. I won't invest in the stock markets right now. But if you look at the stock market where it is now, like, it is about a 95% increase from the lows that the market made in 2020. So this exponential increase in the markets is because that people are looking and predicting that the future is going to be good. All right. So the expectation of the public is that the future must be good for the stock markets and the economy as a whole. Okay. So the share of individual investors also increased to 142 lakh from 122 lakh. Okay. So why this liquidity and why this demat accounts? So, well, there are many ways in which you can analyze this, but if you ask my opinion, I feel that I've written about 4 points. First one being that due to increased burden. First one being that with the onset of the lockdown rules by the government, the citizens of the country have had no ways of paying their excess burden that has been that is there due to the COVID-19 lockdown. Okay, so second one being that limited investment return. So as we know that the fixed deposit and the savings deposit interest rates have reduced, and if you look at the inflation is more than inflation is more than the percentage that savings account and fixed deposit provide. All right, so because of that, I feel people have shifted towards stock markets expecting more returns. Going to the third point, being global liquidity. So basically, what is global liquidity? One word related to global liquidity is FII. FII means foreign institutional investors. Foreign institutional investors, as in, say, suppose you want to invest in Apple or Tesla in USA. All right, you buy a mutual fund that invests in the US stock markets. So say suppose you bought that mutual fund with ICICI Bank, ICICI Securities. So ICICI Security is a foreign institutional investor investor for the US markets. All right. So the significant increase in global liquidity into the Indian equity markets, this was reflected in the FII inflows in the financial year 2021 with a total amount of 37 billion US dollars. Okay, so coming to the last point, additional interest in the financial markets. Well, people sitting at home, they have no work to do because there is no other way of making money, right? So there are two types of people that you have witnessed in this pandemic. One who have been watching Netflix and Amazon Prime, the second one being people who have started to work upon themselves. So the people who started working upon themselves and into the stock market have made money when compared to people who used to watch Netflix and Amazon, right? So okay, so see, whenever there is something that has a lot of positive, it also might have one or two negatives, right? So there are negative points which are there related to the global financial liquidity. It being that we know one quote saying that with great power comes great responsibility. The same way, too much injecting of liquidity brings too much retail and frenzy. Okay, so what is retail? Retail means individual investors like you and me who have a less capital when compared to institutional investors. Frenzy is a wild move in the market. So if you look at the market, having a 95% return in the index in 1 year is a frenzy move, right? I mean, it is a move that nobody expected. So that is the main problem in a bull run. So the main problem in a bull run, which is injected with too much liquidity, is that anything and everything rises. So say suppose companies that are having negative cash flows, companies that are making losses, companies that have no good management, companies that has no growth prospects, even they start rising. So that is the bigger disadvantage that we can see in a bull market. So what should we do being an educated investor? Being an educated investor, our aim should be in the side of stocks which are fundamentally and technically strong. So once this excitement goes away, once all of this party gets over, only those companies that are fundamentally and technically strong will rise. That is a very big thing that we need to keep in mind in a retail market, in a bull market. Okay. So, are you too late to join the party? Well, I mean that this question has various ways in which you can look at the perspective. So, me being a loyal follower of the big bull of India, Rakesh Jhunjhunwala, I feel that this bull run is here to stay. It is going to give more multifold returns to its investors. So, I also do agree to the point that markets have quite run up. So, we can expect a little bit of hiccups here and there. We can expect the market to consolidate and correct. But I feel in the long term, I feel where we should be. In the long term, I feel that the markets are looking pretty decent and strong. So we all know who's Warren Buffett, right? He's called as he's the possibly the greatest investor ever alive. So he is a person of the principle that you need to buy a stock and hold the stock for 20 odd years. Well, that doesn't work in this market because I feel that post COVID-19 pandemic, I feel the markets have become too dynamic. It is too difficult to predict which stock is going to run good for 20 years because nobody expected cryptocurrency, right? Nobody expected financial technology to be the next wave. Well, that is the new wave, which we never expected. We didn't see it coming. So I feel that you need to bring adjustments in your portfolio. You need to buy some stocks. You need to sell some stocks which are underperforming because this market is changing. This is not the one that we are used to. This is changing. Yeah. So this is what I wanted to tell about liquidity and demat accounts. The next slide. Yeah. So the webinar is coming to an end. So can I have a hand raise on people who want to really have a career in the stock markets? I mean, I get that people are interested in stock markets, but is there somebody who's ready to give a lot of their time for the markets? I mean, can I get hand raises if it's possible? Okay, all right. So the career prospects that you have related to the stock markets is that next slide first. Yeah, so the career prospects that are related to the stock market is that you guys are quite young now. Like 11th or 12th is something like it's a little bit you're a little bit early into the stock markets. This is a very big plus point, being that you can start. You are, say, suppose all these courses and certifications that are being mentioned here is something that's done by people once they reach 23 or 24. So you are 6 to 7 years ahead than what people are already doing now. All right. So what are NISM certifications? So NISM is full form is National Institute of Securities Market. So NISM certifications are very important if you want to have a career in the stock markets. So in your CV, if you have an NISM certification, I feel that is going to have a big impact on the interviewer or whoever you're showing your CV to. So I feel NISM certifications are something you can start writing. I think you can start writing NISM certifications once you complete class 12. And then you also have, when you're looking at a more long-term perspective after UG, I think you can also do a master's in finance, which is something which is a very common degree that people do. Financial technology, fintech. Fintech is something new. What is fintech? Fintech, financial technology, is related to cryptocurrency and blockchain. Everything to do with all of that. If you're a person who likes psychology, and if you're a person who likes psychology and finance at the same time, you can also do behavioral finance. Behavioral finance is something, in which you identify the market swings. That is, you identify about the market. You read the mind of investors. So that is what, in short, you do in behavioral finance. There are many online and classroom courses also available related to fundamental and technical analysis, which you can start taking up once you finish class 12. You can also do CFA. CFA is not a postgraduate degree, but it is a very important postgraduate certification. A CFA is very difficult when you compare it to an MBA or a master's in finance. It is regarded as one of the most valuable courses in the world if you want to do something related to the investment horizon. So I feel CFA has to be on your watch list if you want to do something related to fundamental analysis. And there's one more also called as CMT, that is a chartered market technician. That has to do something related to technical analysis of what I showed. It has to do something related to that. And CFA is something that is related to what Paridhi has told. That is related to the fundamental analysis part. Yeah, so that's about it. If you guys have any doubts or any Q&A session, I think we can have it. I mean, it's complete. The forum is all yours. So you need not hesitate. You can ask any question that you'd like to ask.
Yeah, I have a doubt.
Yeah.
For instance, Steven Ainsman, he took advantage of the 2008 financial crisis and he made a lot of fortune out of that. So probably considering that Bitcoin might become a bubble, is there any opportunities if the bubble bursts?
If the bubble bursts, all right. So cryptocurrency is something that I've just started into. But see, what I feel, I am an adamant follower of the thing that until and unless there are no guidelines for such something, I feel it has no value. You tell me, why is that demand and supply for cryptocurrency? Is it because Elon Musk tweets about it? If he tweets something good about crypto, it goes up. When he tweets something wrong, it goes down. There is no fundamental reason because of which people are investing. See, people started telling that cryptocurrency, they started with the word currency, right? They told cryptocurrency is a currency which can replace the fiat money. Fiat money being the currency that countries use. But from being a cryptocurrency, now people call it a crypto asset. They are thinking that they can hold on to crypto asset from, say, suppose if you bought it at $20,000, it reaches all-time highs of $50,000-$60,000, right? So there's a lot of frenzy, as I again told, in the cryptocurrency market. But what I feel is that many big people tell that once there is something new that is starting, that there is a lot of noise that is there. So if you're able to ride through the noise, I think you can have good results. So I think that many countries are banning crypto, many countries are giving crypto the rights. So I feel until and unless cryptocurrency is not regularized, like we have SEBI in India, right? Like we have SEBI in India, like that, if there is something for cryptocurrency after which the volatility decreases, I feel cryptocurrency is a good place to invest in. But as of now, I feel that if you are a new investor, say suppose you are a HNI client, you have net worth of about 5 crores or 10 crores, investing 10 or 20 lakhs in cryptocurrency is not going to make a big difference. But we being students and it being a very new market, it being a very new market, and it has, you tell me what are the fundamentals of a cryptocurrency? Is it an underlying asset? No, it has no value as such, right? If you can code, you can make a cryptocurrency. Okay, it takes a lot of expenses, but there is no regularized payment system for cryptocurrencies, what I feel about the crypto market. So if at all you want to invest, well, my dad invests in the cryptocurrency. I've told him not to invest. So I mean, it's on your risk appetite, because there is nothing solid that can be presented related to the cryptocurrency market as such. Okay, Frista's asking, how about people pursuing certified management accountant? Is it worthy learning the stock market? I'm particularly, I don't know what this is certified management accountant does. I feel it's something which is related to Frista, can you please switch on your mic? Okay. So, okay, I get the crux of it. I feel that a certified management accountant, well, yeah, if you look at, the big bull of India, he's completed CA, right? After completing CA, he has taken the stock market as he's taken it as a career. So I feel that, stock market is such a narrowed down, but a great course where even a person who's doing engineering can study. Even a person who's doing finance, who's into the commerce field, also can do it. The only thing is that you need to give your time and dedication for it, right? Because as far as I know, a certified management accountant, I feel a certified management accountant, the portions might not be covering what stock market basically is, right? So I feel you need to, no matter what course you are pursuing, if at all it except if it's not a course related to stock markets, I think you need to learn about it.
Yeah, okay, thank you.
Yeah.
Sure.
Yes.
This is Sarp now. I have a question for you.
Yeah, ask me.
Like if you see cryptocurrency is, we can invest in cryptocurrency we invest in cryptocurrency with the aim of selling it at a higher price, right? But if the government of China has banned the cryptocurrency, the production of cryptocurrency, mining of cryptocurrency.
Yeah.
Now, America is also planning to launch its own cryptocurrencies. India is also about to launch its own cryptocurrency. Like if you compare it, the cryptocurrency, many people will buy the cryptocurrency that is launched by the government. So Bitcoin, Ethereum will lose its volatility or lose its market capitalization.
Yes, right.
Cryptocurrency is really worth investing.
I feel that, this rightly pointed out, Cypher. Now, by 2025, I think the Indian government is planning to make their own digital currency, right? So I had read about it. So I feel that, Bitcoin and Ethereum, I feel if at all you want to invest into the sector of cryptocurrency, I feel investing only on the top 5 coins is something that is safe, right? Because that's what, as I told, it is not regularized. It's something that just started. We don't even know who started cryptocurrency. We don't even know who's the founder of Bitcoin, right? So until and unless Bitcoin doesn't get regularized, I feel Bitcoin is a risky investment. But you can also take the advantage of, you can play it dirty. You can take the advantage of, you can take the advantage of the volatility as well, if you are lucky enough to time it. Is what I feel. Yeah.
Don't you think Elon Musk is really, factually, is manipulating the price of the cryptocurrency, right?
Yes, absolutely. I mean, when he puts a tweet regarding Dogecoin, when it's a positive tweet, people start buying Dodge. And I felt this about a month ago, that like the 1992 Harshad Mehta scam, where people used to buy just because Harshad Mehta used to say. The same thing is happening over here. Elon Musk tells to buy Dodge, people buy. He tells to sell, people sell. So I feel it is something that's unethical. But yeah, whoever is making profits, good for them.
Yeah, but Elon Musk is he tweets that he is selling, but Tesla, since the Tesla is holding it, Bitcoin, Ethereum, and Dogecoin, Tesla is holding it. But Elon Musk personally sells only his holdings. He's not selling the holdings from the Tesla company. So that's really like he is gaining an advantage from it, right?
Yes, definitely. Yeah. Any other doubts if anybody has related to finance sector as a whole?
I have a doubt. So usually in a stock market, when there's a side trend, what should we do? Buy or sell? What can you?
Yeah. So actually, that's a good question that you pointed out. In a sideways trend, usually, if you are a person who has the appetite of taking a risk, all right. So when Krista, can you go to the slide of a sideways trend, please? I'll just show you the live example, and I'll tell you how sideways trend usually works. Yeah. Okay. Sideways trend. Okay, so actually, this is it's a very interesting chart formation that you see in a sideways trend. So when you are an investor, all right, and when you are looking at a chart which is in a sideways trend, you either wait for a breakout or you wait for a breakdown. If at all you're holding any stock, see, it also depends on the rate at which you're holding. Say suppose in this Biocon chart, say suppose you were holding Biocon at levels of 480, okay, and then you realize that it is in a sideways trend for a long time. You are in a high risk to reward ratio over here. So once in the sideways trend, once the price hits the resistance level, I think you have to book your losses, and you need to come out of the trade, because in a sideways trend the risk to reward is very high. Because say suppose if it breaks down, you're going to make more losses than when you made it when it was at 420, right? So I feel that anytime you invest in the stock market, invest only that much amount that, if at all you lose that amount, it's not going to harm you. So say suppose you're investing 10,000. So you need to have it on your mind that you're investing 10,000, no problem. If the 10,000 goes, it doesn't play a very big important role to my portfolio. So once you have that much amount of confidence is when you should invest. So that is the time you need to invest the amount. So you only invest that much amount that you're confident in. Do not go outside your risk appetite. That is when you are a beginner. Obviously, when you want to make big wealth, once you gain the experience, you need to take risks, right? So at that time, you can take those big risks, but it also depends on the fundamental analysis as well. So suppose you're holding Biocon. Biocon is it's a good company. It's into the pharma sector. So I feel that Biocon being a good company, you're bought at 480, 460 levels. You need to sit on with the stock for a lot of time, if in order to not book losses. Can you go to the Suntech Realities chart once, Krishna? Yeah. Yeah. So, my personal, I'll give you my personal experience. I was holding Suntech Realty at 330 levels. All right. So it went down to 250. That is the time when I didn't know technical analysis nor fundamental analysis. So I stayed on with the stock because I know this is a very good stock. So from 330 levels, it came to 250. And then from 250, it is now at 390, 400. So you need to have that conviction in your mind that the stock that you're buying is going to perform, and it is something that is going to give you handsome returns, alpha returns. Okay, Giant is asking a question. What are the stocks newbies should invest in? Well, if you're new into the stock market, I feel that investing in the Nifty 50 index. Can I just screen share if you guys don't mind? I'll just show you the Nifty 50 index where you can, okay, I have I'll just start screen share. Just a minute. Yeah, so yeah, so once you are new into the markets, I feel that investing in the Nifty 50 index is a safe option, because the Nifty 50 index has the biggest companies of India. So Reliance, the biggest company by market capitalization in India, Adani or Axis. Okay, Adani is going through a little bit of a consolidation due to their personal reasons. But if you look at the Nifty 50 index, you can pretty confidently buy any of these stocks, because these are something that will never disappoint you in the long run. Again, it also depends on the price at which you buy, which also plays an important role. So I feel you have many companies. You have Bajaj, you have Reliance, you have Asian, you have Kotak Bank, you have Hero Motor Corp, you have Wipro, you have HDFC Bank, you have Infosys. So all of these are pretty safe stocks that you can invest in when you are new into the stock market. Or you can invest in the fund as a whole. Well, investing in a fund as a whole will require more capital, but I feel that investing in these stocks is something that you can do. Yes. Any other doubts? Something? Any questions? Yeah, so Rachna's asking that if Elon Musk tweets about cryptocurrency and stuff, wouldn't that be illegal? Because that's the thing. There is nothing that defines cryptocurrency as illegal or legal. It is not bound by any laws. That's the problem that cryptocurrency has. Cryptocurrency is not bound. See, we have SEBI in India. There is nothing for crypto. So Elon Musk can tweet on anything and everything related to stock on crypto. Nobody's going to stop him, because it's not legalized at the end of the day. So that's one thing in crypto. But there are many people who are bullish on the cryptocurrency in longer run. I feel it's again on your analysis. I am new into the market, so I feel that safety is first, and experience and safety is something which is more important. So I am waiting until the cryptocurrency, the whole sector gets legalized. After which I would probably invest. What's the most volatile stock currently? Okay, so the most volatile stock currently is Adani Green. Adani Green is usually called as the most volatile stock in the Nifty 50 index as such. Adani Green is something that's very volatile. Okay. Any best or popular apps for trading? Okay, so I know there are when it comes to the field of brokers, there are two types of brokers. Okay, one are normal brokers, the other one are discount brokers. So discount brokers, I think you guys know what is Zero, the Upstocks. These are like called as discount brokerage firms. And the normal brokerage firms, you have Motilal Oswal, you have Kotak Securities, you have JM Financial, you have Edelweiss. So these are the various good places where you can open a demat account for yourself. I have my account in Motilal Oswal, so I feel Motilal Oswal is something that is pretty good.
Coming back to cryptocurrency, I have one more.
Yeah.
What if cryptocurrency takes over the fiat currency? Will it happen? Will it literally happen? Or can cryptocurrency literally beat a fiat currency?
See that I mean, we are a little bit new towards the cryptocurrency market, but the way people are having demand for the cryptocurrency, I feel that there might not be. There are two sides to the same coin. It has a 50-50 ratio, so you never know. It might happen. It might not happen.
What will happen if cryptocurrency takes over fiat currency?
Cryptocurrency, I think we are pretty, we are pretty far away from that happening. I feel there is enough time for that to happen. So I don't have my analysis towards that as such as of now.
But the big pools are against the cryptocurrency. They are not investing in cryptocurrency, right? Mr. Rakesh and
Yeah,
Mr. Warren Buffett
exactly.
are not investing in
Yes, yes,
cryptocurrency.
yes. Are not investing, yes. But you look at the new age investors. You have Elon Musk. Well, he's not an investor. He's an entrepreneur. But I mean, like, there's two sides to the same coin. Yeah. What was my first stock? Okay, my first stock was Loris Lab. I bought Loris Lab. I think a year ago, 1.5 years ago. I bought Loris Lab. Loris Lab and Cadila were my first stocks. And why were they my first stocks? Because the pharma sector was in a boom at that time. So I thought investing in the pharma sector would be of a great advantage. Because I was a newbie into the stock market, so I didn't have the patience to sit with the stock. I sold it. I bought it at around 300 rupees. I sold it at 350, 360. Now the stock is above 660. It has like doubled in a year. That's a mistake that I made.
Sure.
Yes.
Can you just go through the website, like how to trade in a website, money control, like something?
Yeah.
Invest.
I'll just share. Just a minute. Track invest or
money
that
control
is you
is
want
better.
to know about? Well, I don't use money control. That is, you guys are asking for that is not a real account, right? You're asking for trying it out. Yeah, actually, there is one app which is called as DSIJ Go. I'm not sure if I would be able. It's there in Google Store. I'm not sure about Play. I'm not sure about Apple App Store, but the app is called as DSIJ. All right. So I feel that is a app which you can. Yes. The Last Investment Journal. That is a good app. You can practice in that. But I think Track Invest. Yeah, I'll just show you Track Invest. Just a minute. Track invest simulation is. I think there is a competition that is coming in school related to Wharton. I think that is a very, very good competition. If you win in that, I think you have the chances of going to Delhi for the next round. So yeah, just a minute. Let me just screenshot. Yeah, so track invest. Yeah, so this is the Track Invest app. You just go in and you just type out trackinvest.in in Google. You just track invest simulation. You go into the website. You start for free, and then you need to write your name, your email, ID, password, your mobile number, all of that, and then you can sign up. After that, you can start doing practice trading in Track Invest. That is a good option of doing. I've been using Track Invest for about 2 years now. More than 2 years, I guess. Yeah, more than 2 years I'm using Track Invest. It's pretty slow, but I feel that there are no clean websites as such which you can use for simulation. Though Track Invest is a little bit slow, I feel the values are very good for Track Invest. I think you can start with Track Invest.
Shivam, you can talk about your blog, Shivam, where you give information about stock and all.
Oh, yes, ma'am. Yes, ma'am. Just a minute. I'll just stop screen sharing. One more thing I like to tell you guys is that if at all, like you really want to, if you are a career-oriented person, I think once you complete, I think you can start making your own LinkedIn profile. A LinkedIn profile will, start once you start early. You can get a lot of, you can get a lot of connections, and you can also come into Twitter, which is also a very good. That is a platform for people to share their views upon I think stock market. Once you get into Twitter, there are many people who tweet about stock market. It's very interesting. Yeah. So this is my website. Yes, the name is earningunderway.com, but there is a little bit of formalities that I need to go through in order to get that website name as such. But I'll just share the link of my website in the chat box, which you can take a note of. So this is my website, which I started with one of my classmates called as Vaishravan. Last year, he had given a webinar with us about the stock markets as such in our school. But I think he's busy now, so he was not able to come for this webinar. So it's we have just started the webinar. We have just started the website. We What is the main motive? Well, the main motive of this website is to analyze stocks and put our views on that stock or a sector in this website. How will this help you? Well, this will help you. You can get to know about how a stock will perform in the future, and if at all you feel that our analysis are really good, you can also buy a stock or sell a stock, which we have mentioned. So here I have not done any marketing for my website as such. So I've done an analysis on Jyoti Laboratories. Jyoti Laboratories is an FMCG company which is based in Mumbai. So I have done an analysis on that. So yes, so I have done. This is the first analysis. I'm doing another analysis on Suntech Realty, which is also which is also a very good company in the real estate sector. So once you guys subscribe to my blog, still the blog is under the process, but yeah. You can also follow me on Twitter if at all you have any doubts or anything. I'm pretty active on Twitter because I mean Twitter is known for stock markets and everything. So yeah, that's about it. Yes, ma'am. Any other doubts?
Shivam, are you done with all your whatever you had to say?
Yeah, I'm done.
Is that okay? I wanted to add something over here, like for the 12th standard
Yes.
students. Yeah. So
Yes,
basically,
please.
like in 12th standard, you guys are doing a project, right, on stock market. Like many of you are doing a project on stock market, and even Shivam, Sapranav, and me, we all three did the project. So please try not to just copy from Google. Please do your research. Like you can use this webinar. It is a good source. You can find the recordings as well on the YouTube, right? Use this as a very good resource and try to you know actually analyze a company. Like use money control or track invest, as like you just invest in a particular company and look at the prices daily for 1 month or a period of 28 days. Like when you apply the theoretical knowledge practically is when you learn. Like whatever we said was theory as well as practical. Like when you do it on your own is actually the way you learn. So just try to analyze the company. What I did was, like, I in the money control app, I it's virtual platform, right? So I just invested in five stocks from five different sectors. Okay. Yeah, one second. Yeah, so basically what I did was, I took five companies. I'm not sure of what companies which I took. There were five companies from five different sectors, and I wrote down the prices, the open price, low price, previous close, and all that price. And we made a graph out of it. Like it was very difficult, but it was very interesting to do. Like you need to take interest and start doing this stuff for your project. And like when you have the invigilators going to ask you questions, be confident about it. Like they're going to ask you simple questions, but if you're confident, you're going to rock that Q&A session with the invigilator. So that's what I wanted to add.
Pari,
Yeah, Sabrina.
Are you so confident that board exams will happen next year?
Yeah, but I think there are projects that they have to do, right? Like, I'm not sure because my brother is doing that project, and I thought it's very like it's a great thing that if I just tell them to do this because, yeah.
Fine, fine.
Yes, guys. Do you have any other doubts related to the stock market? I think it's completely cool. You can ask any question. Like we are not any teachers that we're sitting over there. So any doubts or anything related to stock markets? All right, then if there are no doubts or any questions that you guys have, yeah, there's a question here. Would you ever prefer or recommend active trading given favorable circumstances? Favorable circumstances, as in, I didn't understand. What does favorable circumstances mean? See, I'll tell you one thing about trading. Okay, once it comes to active trading, I feel it's something that you cannot earn wealth in time. All right, because I'll tell you one thing. In say, suppose you are an active intraday trader. All right, so if you're an active intraday trader, you can maximum gain 10% or maximum 20% in one day. All right, 20% it's an upper circuit which a company hits. So 20% increase in the share price is called as the upper circuit. All right. So maximum to maximum returns you can make in a day is 20%. So the only way you can make very good money in intraday or swing trading is that you have a large capital. You have a capital above 1 crore or 10 crores. That is when you can make good money in intraday. Or else intraday, I feel it is of no use. I feel intraday is something that people do when they are not ready to analyze, right? So that is what I feel about intraday trading. But if there is another segment which is called as futures and options in stock market. So but if you look at the futures and options segment, about 90% of the turnover comes from futures and options. So futures and options in short has something to do with trading. Okay, so it is intraday and a swing trade is what you do in futures and options. But I would never recommend anyone to do futures, because futures, I'll tell you how it is. Futures is like you are betting on the market. So if you look at the markets in a way of a betting place, you'll get the results in the same way. If you look at the markets in the perspective of a business, you will make wealthy returns in terms of a business perspective. So that is what is very important. It's all about the way you perceive things. So if you perceive the markets with discipline and in a proper way, you will get handsome returns for sure. I won't recommend active trading. I would not recommend. Next question is that how to invest in shares of foreign companies, a foreign index like S&P 500. Okay, so as of now, there is a lot of restrictions for Indian investors to invest in S&P 500 or any company as such. I think a person cannot invest more than 1.5 crores or something into the foreign markets. But there are many companies. You have mutual funds of ICICI, you have mutual funds of Axis Bank, which have a mutual fund which specially invests into the stock markets of foreign companies and into the foreign markets. You can do that. Or else another viable option is that, say, suppose you know somebody in the United States. Okay, you can tell them to open an account in their name. They can give you the password and ID, and you can trade from here. So even you can do that also. So even that is an option. You can invest from here if you know people in USA. That's there. But if at all you don't know anyone in the United States or say any country as such, I think you can invest through mutual funds. That is why we have something called FIIs, right? Foreign institutional investors, as I told previously. So FIIs from other countries invest in India the same way we would be FIIs for other countries, right? So that's the thing. Yep. I mean, like, yeah, I'm pretty satisfied. I like 4 to 5 questions. That's nice. Okay. Are there any other questions you guys have? Would you recommend any FII? Okay, I think you're asking me if I would recommend any company, any mutual fund from India for investing. I think you can go on with ICICI Securities. I think they are, every big mutual funds that are there in India, you can invest through any of them. You have ICICI, you have from HDFC Bank. I feel many of these banks have a lot of their FIIs. So you can, many of their own mutual funds. So you can invest from that. There's another one. There's another one website called a Small Case. That is something new in the field of mutual funds. A small case, basically, what it does is it is a sector fund. All right. So according to your risk appetite and according to the stocks that you choose or the sector that you choose, they give you returns. So I think Small Case, that is my new company. I'll just put it on this chat section. You can have a view on it afterwards. And so Small Case is also something that is as new. Yeah.
And Shivam, there's one more thing called as IND Money, right? That also invest in US stocks. That is also one more app, like small case.
And okay.
I'm
Oh,
not
yes,
sure.
yes, yes, yes. IND money. Yeah, that is
Yeah,
something new, right? IND money is new.
yeah,
Yeah,
that is something new.
yeah. I've heard of, yes, yes. I've heard about it, but I have not researched on that. Yeah, IND money. Even that's something new. Yes.
Yeah, yeah.
Is there anyone who invests into the stock market to their parents' account? Like, is there someone? I think Nisha ma'am was telling me that there are students who invest through their parents' account. So, is there anyone who does that?
Last batch, Shivam. These children have
Oh,
not
last
started
batch.
yet. Yeah. These
Okay,
children
okay.
don't know anything about financial market. We have not just started with that chapter.
All right. Okay. Yes.
That's why we wanted you to give them an introduction about
Yes.
what it is.
Introduction. Yes. I think we could, like, if we came to the expectations that you guys had. And
Yes,
yeah.
yes, Shivam, it was a well-researched webinar.
Yeah.
A lot of information we
Thank
were
you.
able to gather. I was able to gather. Great.
Yeah.
Very proud of you.
Thank you.
Thank you, ma'am.
Thank you.
Thank you.
Thank you, Paridhi, Shivam, and Sai Pranav for having taken your time and for having made this seminar possible for our for the students of our age. Like, you have passed this time, but it's still the beginning for us. So thank you so much for having done this for us. And it has enhanced our knowledge about the stock market, and it has introduced us to the world of stock market. If I have to say, thank you so much. So if the students have any more questions, you can directly ask Shivam, Paridhi, and Sai Pranav through the information given to the in the presentation. So yes, and now I would like to call upon Darshan and Uday Chandran to briefly give information about the Wharton Global Investment Competition. Thank you, Paridhi, Shivam, and Sai Pranav. Thank you again.
Thank you. Thank you.
Good morning, guys. Uday and I are here to talk about the Wharton Global Investment Competition. So once again, let me just present my screen. Can someone make me a co-host? I'm not able to present my screen. All right, guys, hope my screen is visible. Okay, so Wharton Global Investment Competition, as its name suggests, is a global investment competition conducted by the Wharton Business School of the University of Pennsylvania, located in Philadelphia. It is conducted every year for teams of a minimum of 4 members and a maximum of 7 members, where you have to develop an investment strategy based on a given case study. A case study differs on a yearly basis. So now all right, so yeah, now let's go into the team roles and responsibilities. We'll learn about this competition in detail, and you've got your chance. All right, the 12th graders have only one chance now since they're in their final year of their schooling. The 11th graders have two chances, and even 9th and 10th graders can participate in this competition. So let's go into detail about the competition. Now let's start with the team roles and responsibilities.
So this competition is nothing but it's like a virtual stock market where you invest for your client and then make sure that you maximize their wealth. So every team can contain 7 members. And sorry, I can't turn on my camera because in my last device I was removed from the meeting. In this one, I don't have proper place to place it. So I'll just continue like that. So so the team contains of 4 to 7 members and 7 members in maximum, and they can have one advisor. So the advisor can be like anyone. Advisor can be anyone who's 19 years or above and has an experience of the stock market. Even your teacher can be your advisor. So you have to choose your advisor wisely so that you can get enough information on the stock market so that you can invest properly and build and devise strategies. So the second role is your team leader. So that a team leader is not very different from a team member. It's just that communications from the competition will be directly. It will be communicated only to the team leader, and the team leader will notify the team members. So he's just a mode of communication between the team members and the judging panel. So then comes the team members. So there'll be a minimum of 4 to and a maximum of 7 team members, including the team leader. So the team members can be uh, yeah, the team can split the sectors of stock market, like different sectors like steel, food industry, like that, and give it to each team member, where every team member can research on which companies are the best in their sector, so that they can effectively try and invest in the in their market, so that they can maximize returns. Now we'll look into the case study.
Right, guys. As I said earlier, every year's competition is based on a case study. So this case study is the foundation based on which you're going to build and develop your investment strategy. And just make sure it's long term, because as Shivam said, he's like day trading is always more riskier and it's not advisable when compared to investment. So there is a difference between trading and investment. Investment is when you invest money in a share for a long term. Trading is when you want to make speculative gains. Speculative gains as in you buy shares when its price is low, and you sell it immediately when it increases. So that is called trading. So this competition is about investment. They've mentioned in the website itself, it's not a trading competition, it's an investment competition. So let's the client is Nicole Jordan. She is the senior vice president of a technological company named Via. It specializes on it specializes in digital infrastructure. And this case study, there's nothing much about it. It just states her life and all that. And it also says that she has two main financial objectives. It's like for every year she wants to sponsor a woman of color, a non-white person who's often discriminated against and doesn't get the privileges other people get. So she wants to provide $5,000 to a person every year for at least 10 years. So it adds up to $50,000. And then she also wants to have $50,000 for the educational expenses and other expenses of her nephews and nieces. So So there are there's $100,000 in cash, in virtual cash. So you as far as this case study goes, you are working for a company named Wharton Global Asset Management, and your advisor, the one you choose as your advisor, is your portfolio manager. And the advisor realizes that Nicole Jordan is a very important client, so you have to develop a proper strategy. You have to do your research properly. You have to develop a proper strategy before you submit it to her. So it's over a period of 10 years, right? 10 years is a really long-term investment. So you have to devise a strategy so that the wealth is maximized. It's the risk of loss is reduced. You have to maximize your wealth with minimum risk. And yeah, and then it is mentioned here that you can invest in stocks. You can also invest in bonds and currency. But if you are investing in bonds and currency, you have to mention it in your reports, which I'll talk about later. And the place where you're going to trade, it's called the Wharton Investment Simulator. That is where you're going to make your place your trades. You will only be able to buy stocks on the Wharton Investment Simulator. You won't be able to buy currency or notes. So in case you want to buy currency or bonds, you have to specify it in your reports, and you have to reserve your cash. For example, you want to spend $30,000 on currency and bonds. You have to spend only $70,000 of your portfolio on stocks. So you have to maximize your wealth. That is the main thing. And you have 10 weeks for the competition, 10 weeks to test your investment strategy. So in case you run into a loss, from your portfolio value drops from $100 to say $85 or $80, you need not worry about it, because they are not going to consider your portfolio value for the competition. They're going to consider the strength of the investment strategy that you have developed. Now let's go into the rules of the competition. So as far as student eligibility goes, you have no problem if you are above 14 and below 18 at the start of the competition. And advisors need to have a minimum age of 19 years. So you can ask our seniors, Shivam, Sai Pranav, those people can be your advisors, or teachers can be your advisors. And if your advisors are teachers, they can manage any number of teams. If they are not teachers, they can have a maximum of 3 teams only. And teams, guys, you have, as Uday said before, you have to have a minimum of 4 members and a maximum of 7 members, including the leader. And your advisor and leader are the bridge between you and the judging panel and the organizers, because they will receive all the mails. The team members are not supposed to receive all the mails. They will receive all the mails, and they will convey it to you. Yeah, and then when it comes to trading rules, the Wharton Investment Simulator, as I said, it's a website for placing your trades for stocks and all stocks. The competition starts on September 27th. Before that, you will get to have access to the website. You can go through the website. You can go through the approved stock list. Approved stock list is a document which states all the companies that are available for this competition. So you can go through the approved stock list. You can plan on what companies you want to invest. You can develop your investment strategy based on the approved stock list, and you can start placing your trades from September 27. And in case you have to take the US stock market, in case you want to invest in foreign stocks like Apple, Amazon, all that, they come under the US stock exchange, right? NASDAQ, NYSE, and all that. So in case you want to do that, you have to wait till 7 o'clock in the evening, so that you can, like, different time zones, right? So yeah, you get me. Now let's go. Now let's learn about placing trades.
All right. So at the start of the competition, you will be having $100,000 of virtual cash with you, which you can use to buy any stock you want. But make sure you choose the stock wisely and invest a considerable amount in the stock, so you get a good returns from that stock. And then trading begins on September 27th. You can start trading on September 27th, and you will be having a total of 100 trades with you.
which means if you buy some stock, it will be considered as one trade. Even if you sell some stock, it will be considered another trade. So you can do a maximum 100 trades within the timeline. And then you have to make at least one trade before October 17, from 20 days of the start of the competition, so that the judging panel can know that you're not inactive and you're actively participating in the competition. And one more thing is that please don't make a lot of trades just because you have 100 trades with you. The competition is not about like multiplying your wealth, but it's about building your wealth for a period of 10 years. So just make sure that you invest in companies which can grow more in the long run, and that they give steady returns to the investor. Your job is just to make sure that your investors' future is secure by making investments in good companies. Uh, yeah. So yeah, and one more thing. The top 50 teams will be selected to the next rounds. So the top 50 teams will not be marked based on the top 50 portfolio values, but it'll be based on the strategy which you used. This how strong your strategy is, this more chances that you get into the top 50. Your portfolio value doesn't matter in the if even if you're selected. That's because they only consider your strategy. You can very well go short on stocks and then multiply your wealth easily, but they won't judge those kind of portfolios, because they are looking for they're looking for a good strategy in the long run, right? Now let's look on the deliverables of your competition.
Deliverables for this year's competition are not out yet, but I'll tell you what it is. Deliverables is nothing but the way you frame your two reports that you have to submit to the judging panel of the competition. So you have to submit two reports. So one is called the mid-project report, which is submitted in the middle, like 4 weeks or 5 weeks into the competition. And one is the final report. So mid-project report is like you have to give a basic gist about your investment strategy and how you have addressed the requirements of your client. And in the final report, you have to go in depth. Like you have to explain your investment strategy very clearly and precisely, and you have to address the client requirements more specifically, and you have to put in your experiences into it. Like put in your experiences, as in you have to write about what are your experiences, how did you feel during the course of the competition. Like it's not only about investment, it's about teamwork, it's about cooperation. Everything counts. Okay, so that's how it is. And yeah, everything will be specified here. The font style, the font size, everything will be specified here. So you have to comply with all that. And judging and rubric, this is also not out yet for this year. It will be coming soon after you register for the competition. But then again, I'll give you a basic idea about how it's going to be done. As I said earlier, they're not going to judge the portfolio value at the end of 10 weeks. They're going to judge the strength of your strategy. So even if your value drops, even if your portfolio value drops, it doesn't matter, because they're only going to consider the strategy. And the way you frame your report, they have emphasized this word storytelling. Okay, it need not be all theoretical. It need not be like NCRT books. It needs to be storytelling. Okay, you get what I mean? Like I didn't really understand what they meant by storytelling, but then if you understood what they mean by storytelling, good for you, because that's how, like, you have to make it interesting. You have to make it interesting for them, interesting for the judging panel, and you have to avoid using too much technical terms, because it's only going to confuse them. You have to make it understandable by a layman, like not exactly a layman. It must be easily understandable. Okay, now let's go to the competition.
Darshan, can you say what strategy is, Darshan? I don't think the children will understand what strategy means. So what is the strategy you people adopted last year? Keeping the case study
actually,
in
ma'am, we made a lot of mistakes, ma'am.
Yes, ma'am.
We didn't really understand the competition over the past 2 years, because like in 11th grade, we were involved in active trading and we realized it was a mistake. So last year we invested almost all of our money in the beginning itself. So like it's a learning process. So I can't really tell you. I don't want to confuse you. You have to figure it out yourself. Anyway, I'll share my reports afterwards.
No. The strategy. Yeah. Yes.
Ma'am, what ma'am?
You just tell them what strategy is. Like you have a case study. So whatever strategy you develop has to relate to the case study, right?
Yes, ma'am.
That is the way it goes.
Yes.
Yeah. So just tell them what it is.
Actually, in this year's competition, it's a bit different because they haven't specified how to make your investments, so you can develop your own strategy. They only mentioned what the client does, and they have only mentioned you have $100,000 in virtual cash, and you have to build a portfolio. Last year it was different for us. They had certain the client had certain requirements, like 20% of the portfolio must consist of companies that has got good CSR, corporate social responsibility. You would have learned in your 11th standard. Yeah, and 20% must be related to fields that he likes. Like the client liked art, literature, and all that, so must be related to that. We had several specific requirements last year. This year it's not there, so you can develop whatever you want, whatever you feel is right. Whichever company you think have a good profit, be it startup or be it an established company, whichever you think is going to perform well over the next 10 years or for the foreseeable future, you can invest money in it. You might want to consider the ratios. Our seniors told us it's in our accounts book. You will learn it. You might want to consider the ratios. You might want to consider the decisions that companies take. Like it may not be short-term decisions, like the release of a new product, like Apple iPhone. It's gonna like, how long is it gonna stay? It's gonna stay for like half a year. That's it. But then, in case you're taking a major decision like a merger or a takeover, that's going to last long. That's going to have a long-term impact. So these are the kind of decisions that you might want to consider when you're framing your investment strategy. So think long term, okay? Don't, as I said earlier, there's a difference between trading and investment. This is not a trading competition. This is an investment competition. So investment, you have to think long term. Don't think short term. Short term gains are of no use actually, as far as this competition goes. They are only going to consider the strength of your strategy. So think wisely. Think like have a long term perspective and develop your strategy. Now competition timelines.
So the registration for the competition is already open. You can register before or on September 18th, which is almost a month away. So please try to participate in this competition. Even if you have zero knowledge about the stock market or how to invest in stocks, just participate in it. You will get a decent idea on how stocks work. Even when I participated in this competition when I was in 11th, I had no idea what a stock market was, how it functions. After 2 years of participating in the competition and some extra research and stuff, I like know how a stock market functions, but still I'm not exactly sure on how to invest in stocks. So if you participate properly in this competition, you will get a fair idea on how the stock market functions and how to invest in stocks. Okay, so before you can register before September 18th, and then trading begins on September 27th, which is the day you can start to trade. Then November 1st is the date when you have to submit your mid-season reports. So mid-season reports contains of your finalized team members, and then your a gist of your strategy, which will be including in that report. So you submit the mid-season report on November 1st, and on December 3rd, it's the last day of trading. You can make all your trades till December 3rd. After December 3rd, you can't trade anymore, but your portfolio's value will still be changing till the last date of the competition. So make sure you build a good portfolio before December 3rd. And then December 13th is the day when you submit your final report, a lengthy report containing all your strategies, how your team functioned, your experiences, what you learned. Yeah, so stuff like that. Then on January 22nd, the semifinals will take place. Like top 50 teams will be taken to the second round based on their final report and their strategies only, not on their portfolio value. The judging panel will examine every report carefully, and then select the top 50 teams based on strategy. And then March 22nd will be a virtual semifinal, which will be just like how you did the first round. It'll be virtual. Then on then in April next year, if you get selected to the finals, you have a chance to go to Pennsylvania to the Wharton School for the global finale. Yeah.
Yes, ma'am. That's pretty much it. In case you have any doubts, you can actually text us. We'll drop our Telegram user IDs here. You can text us, and you can, like, in case you have any doubts with the registration and all that. And one more thing, only advisors can register for the competition. Students are not allowed to register for the competition. But in case teachers are not like available, teachers are actually busy, you can create an email ID for your new email ID. All of you can sign in. That's what we did last year. All of you can sign in and you can register yourselves. It's not going to be an issue. Yeah, anything you might want to ask, you can ask me.
Okay, I have a doubt. Shall I ask?
Yeah.
And the report.
Actually,
are there any specific strategies for like format for it?
Actually, yeah, you have a specific format for it. It's not released for this year. Like the mid-project report is pretty easy. It's only like 1 or 2 pages. But then the final report is too specific. You have to write like 7 to 10 pages, something like that. Okay, it keeps changing every year. Last year we wrote for like 11 pages, I guess. I'm not sure. The final report is what you have to concentrate more about. The mid-season report is relatively easy, like 1 or 2 pages. Just a gist of your strategy. You don't need to go in detail. You just have to provide a basic idea of your strategy, and you have to basically address the requirements of the client.
Something like an introduction of our team and the strategy that you are going to use, the introduction part like that. In the midterm.
Mid-season report will contain a list of your finalized team members. You can't change your team till you submit the mid-season report. So,
you can change your advisors, you can change your team leaders, you can switch teams until the mid-season report. The mid-season report is the point of time where you finalize your teams, you finalize your team leaders and your advisors, and after that only, after that you cannot change advisors and leaders. And in case you want to change after that, you have to submit a written request to the Wharton school. And one more thing, I think I don't know if Uday mentioned it before, but then there is a rule in this competition. So the number of sectors that you invest in must be equal to or greater than the number of members. For example, you have 4 members here. You have to invest in 4 or more sectors. Like you have many sectors like technology, you have pharmaceutical industry, you've got producer durables, consumer durables, materials and all that. So you have to invest in 4 or more sectors. In case you have 4 members, you have to invest in 4 or more sectors. Either you can give allot one sector for one person, or you can discuss and do it. Yeah, that's it. Anything else? Chat. What was our position last year? We were consistently in the top 50s, but then maybe our strategy was a bit weak, and maybe we didn't do the storytelling thing. So yeah, we didn't get selected for the semifinals. But as far as the portfolio value goes, we were more or less in the top 40s, you can say 40s or 50s.
Top 40. Yeah.
Top 40s throughout the competition. We didn't incur much losses. It was like 20%. Like our portfolio value was above $120,000. But yeah, as I told you, the portfolio value doesn't matter at all. All that matters is the strength of your strategy. Even if you're in a loss, you have a chance of getting selected if your strategy is pretty good.
Yeah, because in grade 11, we went on a loss. So we tried to go short on some stock. And we invested in a penny stock. We invested like almost $40,000 of our cash in a penny stock. It like gave triple the profits. So in a day. So then our portfolio value was like 3rd in the globe. But then we came down we came down immediately because it was an unstable stock. So that affected our. The judging panel might have thought of a strategy was not good. So our strategy was actually not good because we took a huge risk. So the portfolio value doesn't matter because it's only the strategy which matters to the judging panel.
Yeah, and don't involve in active trading throughout the competition. That's something I want to emphasize at this point, because active trading is not going to help you at all. Speculative gains are of no use actually. But then it's not like you have to completely avoid it. You have to you can allot a major proportion of your portfolio for long-term investments, and maybe $5,000 or $10,000 for short-term investments, so that you get extra cash out of speculative gains. So yeah, and then but don't keep it, okay? Because speculative gains are not going. Speculative stocks, like stocks which are very volatile, they're not going to help you in the long term. It's only going to help you in the short term. So yeah.
Yeah. Anything else?
In case you have any doubts, you can ask me now, or we'll drop our Telegram IDs here. You can text us if you have any doubts with the registration and all that. We can help you out.
Any doubts, children, you can ask.
Ma'am, no,
regarding
ma'am, I don't have any doubts.
Okay, so anything you can
Ma'am, and
contact your.
could they also share the website link that they shared right now in the chat box?
Oh yeah.
Yeah.
Oh, yeah, yeah.
Yes, Prishta, you can do it.
Okay, this is the link of the investment competition. And after registering, you will get a link for the website. I told you, what an investment simulator. That is where you place all your trades. That's where the competition is going to happen. So yeah.
Thank you, Darshan and Uday. So if the students have any doubts, they can directly contact you, if I got it right, through Telegram.
Yeah.
Okay, all right. So students, please note, you can directly contact Darshan and Uday through Telegram if you have any doubts about the competition regarding the registration or anything. Now, I would like to call upon Danuja to deliver the vote of thanks.
It's indeed an honor and privilege to be proposing the vote of thanks on behalf of the entire organizing committee. First of all, I'd like to thank our guest speakers, Paridhi, Shivam, Sai Pranav, Darshan, and Uday, for not only sparing their time, but also for providing us insights into the world of stock exchange, like how the stock market works and the numerous benefits of investing in stock market. This was indeed an interesting and informative session for all of us here. Next, I'd like to thank our principal, Department of Commerce, the school faculty, and the entire organizing committee for being the backbone of this whole event, and without whom this wouldn't have been possible. Last but not the least, my heartfelt thanks to all the other schools for accepting our invitation and joining with us here today. I once again thank every single one of you here for your cooperation and attention. Thank you.
Thank you, Tanuja. So if any doubts, please feel free to contact any one of them, Paridhi, Shivam, Uday, Sai Pranav, and Darshan. Please do
Yes,
contact them if you have
yeah,
any.
so please
any
don't
questions.
hesitate. If at all there is anything that you want to ask, I think I have dropped in my Instagram ID as well. So whichever website whichever social media handle you're free to contact me, you can do that. Do not hesitate, please. Yeah.
Thank you, Shivam. Thank you, Shivam. I once again thank every one of you present here for attending this webinar and for taking your time and explaining this to the five people who had presented the things. Thank you.
Thank you.
Kanaga ma'am, do you have
Recording
any words?
stopped.
Kanaga ma'am and Nisha ma'am, if you have anything to say, please.
No, Ashwata. Actually, it was a great webinar. We have learned a lot. I hope all those who had joined the webinar has also gained